Hello everyone. Thank you for taking time out of your Saturday morning to join us, and welcome to the Specialist Trading educational presentation. Now today I'd like to talk to you about how to quickly identify the overall trend. And not only am I going to talk about it, I'm actually going to teach you how to do this, regardless if you trade daily bars of stocks, if you're an intraday trader, if you're an investor, if you like to trade Bitcoin, commodities, currency pairs. It absolutely makes no difference, but this technique I'm going to share with you will teach you how to quickly identify the overall trend in a matter of seconds. Now, someone would most likely say, well, why do we need to know the overall trend? Can I just pick a bottom or a top? You know, I've always been taught to buy something when it's too low or to sell something when it's too high. Well, it's been my experience that that's the reason why most traders fail. It's because you're out of sync with the overall trend. In fact, you are actually buying when you should be selling and vice versa. Let me show you what I mean here, how important this is. As we look at this older chart here, or first of all, I want to start with some facts. Because the reason why we focus so much on the trend is that 80% of all traders actually lose money. And when I say lose money, I'm not really talking about, going to a series of losses or a small drawdown. 80% of all traders will ultimately give away everything that they've earned and are set aside for trading in the markets. Now, the facts also state that 15% of all traders will break even, okay? So after all your hard work and studying and going to those online classes and everything, only 15% of you will just basically be treading water. Ultimately, this means that only 5% of all traders are consistently profitable. And if you want to see what that means in more down-to-earth terms, if there are 100 people in today's presentation listening, only 5 of you will be consistently profitable, okay? Kind of hits home that way. We have roughly about 100 people in here today in the room. Only 5 of you are going to be consistently profitable. So you have to ask yourself, if you look at this chart here, all right, well, the large percentage in red are the percentage in this pie chart that represents the losers. This portion in blue represents the traders that will break even, and the small little sliver here in green represents the traders who will be consistently profitable. So how is it possible that the majority of all the trading profits are captured by such a small percentage of traders? I've been trading long enough where I really don't subscribe to that way of thinking where it's a zero-sum game. I know you can look at that logically and say that's the way trading is. Someone wins and someone has to lose. But in my 43 years of trading, I have learned that there are enough profits to go around for everyone. And you don't have to think that way. It's more of a losing mentality to think that way. That would be similar to saying, well, for every breath I take in, there's someone losing a breath, and vice versa. I mean, there's enough oxygen to go around for everyone, so why would you even think that way? It's the same way with trading. I mean, we're not here to compete against another trader. We're here since there are just, unfathomable, never-ending source of profits for us to just take whenever we want. Then why is it that only such a small percentage, 5%, are able to consistently capture that? Well, it's really not that difficult. In fact, it's rather simple. These traders, this 5%, are consistently on the right side of the market. So that's why it is so important to know the overall trend. They have learned through some simple system or some simple way, technique or indicator, how to be on the right side of the market. So let's look at this example here in the spiders. This was at the beginning of the year, the end of last year, beginning of this year. As we see, someone would say, well, Steve, why do I need to know the overall direction by using some convoluted indicator or some tool? I mean, I can tell we're in an uptrend, we're going up, right? So why do I need to know that? Well, because the markets change. The markets are very fickle. They can change on a dime. As you see here, all of a sudden we went from a nice sloping uptrend to a kind of choppy back and forth. Well, someone could say, well, Steve, that class I took says that this is just building some major base. Maybe this is wave 4 of a Fibonacci or of an Elliott wave, and so I should buy here. This is major support. So you step in and buy based on your tools for determining the trend, and then this happens, right? Okay, what happened to all those great ideas and support and resistance and following the institutions? See, there's no consistency in that. So at this point, you probably say to yourself, wow, we're at the beginning of a major downward move in the market, so I'm going to get out, and if the market bounces a little bit, I'm going to go short. So you decide to look at the market from a negative point of view and to short things, and then this happens straight up, and then you lose on the selling side, right? Well, today, in today's class, I'm going to share with you how you could have been on the winning side of just about 75% of this market move by adding just a simple tool to your trading. So, what if there were a tool that were automatically designed to put you on the right side of the market? Well, there is. So this is what we're going to be talking about today. And you're going to see on our platform, the PTS Primo Charting platform, how easy it is because it actually teaches you how to be on the right side of the market. So thanks once again for joining us and taking time out of your Saturday morning. This promises to be a great educational presentation. Welcome once again. My name is Steven Primo, President and Founder of Specialist Trading. 10 years ago, I teamed up with Pro Trader Strategies, that's my sister site, with one goal in mind, and that was simply to educate traders. As you'll see in today's presentation, we're all about educating you. I know a lot of webinars you may have attended in the past, they'll say, well, we have the perfect system, we have the perfect indicator or the perfect market you should be trading. They'll show you a lot of winning examples. And then they say, in order to get these kind of results, all you have to do is spend $5,000 or $10,000, and we'll show you exactly how to do that. Well, we are different in the fact that we're an educational company only. We're only trying to teach you how to educate you. And even if you don't decide to be one of our students or one of our members, we always like to leave you with some little bit of education so that you can use on your own. So in today's class, you'll see how important this piece of information is. And as I stated, you'll be able to start using it as early as Monday if you like. But before we begin, as always, we're required by law to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results in defining what the overall trend is, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also please remember that all examples are strictly for educational purposes only. So as you're taking a brief moment to view our disclaimer, if you haven't done so already, we have a good-sized crowd here today. You're all invited to follow us on Twitter. There's our handle right there. You may want to copy that down. Every day I post different educational information. Sometimes there are signals that our strategies have generated. A lot of times they are little bits of information on how to trade. And also we have some bits of financial wisdom that I've accumulated along the way. So there's a lot of great free educational information. Please feel free to follow us on Twitter. Now, as I stated, if you're coming to today's presentation thinking that I'm going to share with you the perfect system or the perfect time frame to trade, I can't tell you how many emails I get on a daily basis about, Steve, what is the market you think is the best market, or what's the best time frame, or should I trade this? Or if you're going to come in here thinking that I have the perfect indicator for you, you've come to the wrong place, because that goes entirely against our philosophy. Our goal is simply to teach you how to trade, because a good mentor does not trade for you. He teaches you how to trade. Someone will say, well, Steve, how do you know this? Well, because when I first started trading on the floor of the Pacific Stock Exchange, that's where I began my trading career. This was 42 years ago, all right? I was doing the same thing probably many of you are doing right now, okay? I was looking at all the fundamental news, all the earnings reports. I had all the estimations coming out of the 50 or 60 stocks I was trading and making markets in. I was following about 10 or 20 different indicators on my screen. I subscribed to all the newsletters. We didn't have the internet then, but I had all these newsletters, so there were no chat rooms, but I was following what all these so-called gurus were telling me what to do. And guess what? I couldn't make a dime. My first year or so, I struggled tremendously because nothing was really working in terms of consistency. Now, I had a few mentors on the floor who were specialists themselves. That's what we call this, a specialist edge, who taught me all the things that I teach my students now in over 110 countries and in virtually every state in the United States. So these things that were taught to me have virtually sustained me, going on 43 years now, starting in January. And hopefully, if I can teach you the same things, they will be able to sustain you for that same amount of time. So our goal here is not to force feed you signals, not to tell you what market to trade, not to tell you what time frame, but simply to teach you how to trade with the same edge that I was taught with, the specialist edge. Now, since this is going to be an educational class, please feel free to ask me as many questions as possible, but we have a number of slides here for you today. So please, if you have a question, kindly write it down and remember, and I promise I'll get to it, but we're going to take the questions at the end of today's class, okay? So we don't have to stop every 5 seconds and, make sure that you fully understood, what I went through. Many times the next slide will present it and you'll be able to fully understand, okay? All right, with that said, let us begin today's presentation. And here's what my mentors taught me. One of the first things they said is that, Steve, Being consistently out of sync with the market is the root of all your losses. Now think of it. If you are buying and the market goes down, it's basically you're out of sync. You're not doing what the market wants to do. You're going against the trend. And think if you're selling and the market keeps going higher and higher, well, basically you're swimming upstream. You're not in sync with the market. So it doesn't necessarily mean that you have a faulty strategy or faulty system. It doesn't necessarily mean you don't have enough experience. Most of the time, in my experience, it's been that you're out of sync with the market. So that's the root. We have to be able to first, before we do anything, know how to be in sync with the market. So what if there were a tool, as I said earlier, that was automatically designed to put you on the right side of the market, to get you in sync, not to guarantee that it's going to work 100% of the time, but to really give you that high level of consistency? Well, don't worry, because there really is. It's called the buy-sell line. Now, before you get frightened and say, oh, okay, here comes the sales job, I got to buy this $10,000 buy-sell line tool. No, you don't. In fact, you already have it at your disposal. If you have any type of platform or any use of the internet right now, you can go to free site and simply click on whatever chart you're looking at, the 50-period simple moving average, because that's what the buy-sell line is. But see, most people use this incorrectly. They use it as a means to enter. They use it as a short-term trend identifier with a bunch of other indicators. In order to use this properly, all you have to do is ask yourself this question before each trade. But you must ask yourself, where is price in relation to the buy-sell line, the 50-period moving average? Okay, I'm going to repeat that again. You may even want to write this down, put it on a Post-it, and put it on your computer screen, because you must ask this before you pull the trigger, before you buy or sell. Regardless if it's an investment, regardless if it's a 5-minute trade, it makes no difference. Always ask, where is price in relation to the buy-sell line, which is the 50-period simple moving average? Because once you ask yourself that, you're only going to come up with 2 possible scenarios. If price is above, then you will only have a buyer's bias. That means whatever strategy you're trading, you should only be concerned with the buy signals. Now, conversely, if price is below the 50-period moving average, the buy-sell line, then you should only have a seller's bias. Whatever strategy, whatever technique you're thinking, if some earnings came out, if you want to sell because it's bad earnings, that price should be below the buy-sell line, okay? Now, let's look at this chart of the spiders that we looked at earlier. How could this have helped us, all right? Well, once we add the 50-period moving average, we see that, well, it's really easy to know that we're in an uptrend. And now that we are distinguished below the 50, well, now we know that we're just a seller. We don't even want to consider buying, all right? Now remember, this is not designed to pick tops and bottoms. It's just designed to get us on the right side. Now, sure, we had a really nice rally here, but at this point, you would have said to yourself, okay, I'm only looking at this from a buyer's perspective. Remember, this is not a strategy. It's not a system. So someone could say, well, Steve, you would have lost a lot of money here. Well, not necessarily, because remember, this is only telling us what side of the market to be on. It's not generating signals. So just because we are above or below does not mean you blindly buy or sell at the market. It means that that's the bias or the mindset you should have. Now you have to add some structure in the form of a strategy, in the form of some type of signal, okay? Let's look at this monthly chart of the spiders, okay, coming into 2019. Most people say, well, Steve, how did we know this was going to go up? Well, you don't know how long or how high something will go up, but we knew well in advance in 2011, looking at these monthly bars, that we were going up, and we continue to be above on a monthly time frame. There you have it. We are above or below the 50-period moving average. Let's look at another stock here. Now, these are older charts. I'm going to share with you just older charts here that may be 6 months or so old, just to share with you the concept so that you fully understand it. Towards the end of this presentation, I'm going to share with you some current charts that are actually up to date up until today, okay? Okay, so we see now that we're in a downtrend. Someone could say, gosh, you know, how did I know this is going to go lower? I was buying the entire way down, right? Sounds familiar, right? You buy here thinking there's support. Well, that doesn't work. Well, you buy here thinking we made a bottom. Well, that doesn't work, and so on. If you added the 50-period moving average, all you have to do is ask yourself, where is price? And at this point right here, we had consecutive closes below. So now we knew well in advance not to buy this and only to look at it from a seller's point of view. You see how simple trading can be when you get out of the way, when you uncomplicate things? How about this example in UA? Someone could say, well, Steve, you know, I was taught to buy low, sell high. I bought here and I had a nice bounce for a week or two and then it went lower. I bought on this bounce thinking that was the bottom and then it went lower. Well, if you had added the 50-period moving average, you would have seen that we were never consecutively above the 50. So every bounce should have been looked at as a selling opportunity, not a buying opportunity. Now, here's an example where it may get a little bit more difficult, but a few little pointers to share with you to kind of make things a little simpler. As we see here, we kind of have a sideways market in CREE, all right? If we add the 50-period moving average, we see that we are currently below. So that means even though we're kind of basically going sideways, the mindset is to look at this from a seller's point of view. Now, nothing much happens this last couple of weeks, but now we start to see that we're oscillating and kind of flirting with the buy-sell line, all right? Here is a rule of thumb. Look for at least 3 to 5 bars to close either above or below the buy-sell line before an overall trend is established. So in other words, if you see one close above, that does not tell you that, oh, well, Steve says now we're in an overall uptrend. You need at least 3 to 5 bars to close there, okay? It's your discretion. So use this as a rule of thumb. It's not written in stone, but it's just something that will help you. So at this point, when we started to see price close above, we had a total of 1, 2, 3, 4, 5 closes above. So that, even though the market looked as if it was going sideways, that was the market telling us that it wants to go higher. It's not me. It's not some guy on TV, not some guy in a chat room. The market, the source of what we're trading, is telling us it wants to go higher. So who are we to argue with the market, right? Our job is simply to listen to it. So we get out of the way if we're thinking about selling. We simply look at this from a buyer's point of view. And as you can see, the stock took off. Someone could say, well, how did you know that? Well, we didn't know how high it was going to go. We just knew that it was telling us it wanted to go higher. Here's another example in MRK, just to share with you that this is not 100% foolproof, but that it will many times be consistent, meaning that a lot of your signals that are faulty, that lose money, will be able to recoup those losses. For example, let's say that your strategy based off this little consolidation had you going long. You said, well, I'm following what that guy Steve Primo says. I'm above the 50 and my strategy gave a buy signal here. And I have a couple of weeks of a nice profit, but now I've lost it all. And now I'm in the loss mode. I'm kind of losing money here. And we're flirting with the buy sell line. Well, you had 5 closes above. So this was positive. And it did go up for a week or two. But then the market decided to change its mind. So if you didn't exit, well, and if you were still long this, guess what? This is a big warning. Why? Because we have a total of 1, 2, 3, 4, 5, 6, 7, 8, 9 closes above. So even though you may have bought right here, it would be strongly suggested to take your loss and get out. And if you're a more aggressive trader, to actually look for a shorting opportunity. Why? Because the market is not just warning you, it's screaming that it wants to go lower. 9 closes below the buy-sell line. As you can see, Merck fell 8 points within the next week. Once again, this is how traders lose money, because they say to themselves, well, gosh, how do I know this is going to go down? We don't know how low something will go down, but we do know what the market is trying to tell us. So you can either jump on board or get out of the way. So I know a lot of you are saying, this is just too simple. I've never used this before. I always thought I had to use some convoluted indicator or look and see what the futures were doing or figure out what the institutions were. Okay, you don't have to overcomplicate your trading. Trust me, I was taught to look at those things 42 years ago as well, and they didn't work for me. So why would you think that they're going to start working now? Now, I know a lot of you are saying it's just too simple. Well, let me show you how important the buy-sell line is. All right, here's a chart in the Dow. All right, the market's been going higher, and as you can see, it's been having some difficulty in the Dow. Okay, we've been having some difficulty. Here's the only trouble. This is not a current chart of the Dow. This is October 1987. Does anyone remember what happened in October 1987? That was the crash of 1987. I remember it like the back of my hand, like it was yesterday. I was on the floor trading on the floor of the stock exchange in the crash of 1987. Now, if we apply the buy-sell line, we see that coming into that time period, we were in a nice overall uptrend because price was above. But look what happened here. We started getting some warnings from the market. We started oscillating below, above, below, above, okay? So this was a warning telling us right here we had couple of closes below, but then it bounced back up. Not telling us that we're in a downtrend yet, but right here we had 1, 2, 3, 4, 5, 6, 7, 8, 9 closes below. Extremely powerful warning. Now, 1 or 2 closes above, back down below, 3 closes above, and then back down below. All right, even if you didn't have enough information to make a qualified decision, at this point, there are a number of red flags being posted by the market, not by me, not by some guru, but by the market. So if you're a little bit worried, I would at this point suggest either to move your stop up if you're long, maybe sell a portion of your position, okay? Or if you're thinking about getting long, maybe wait till the dust is cleared, maybe stay on the sidelines. All of these would have been good suggestions. Remember, we're not recommending anything. We're just giving you suggestions for this and trying to teach you so that you can make your own decisions. But either one of those would have been a good suggestion because we all know what happened. The crash of 87 happened, and that would have been comparable to a one-day market drop of over 4,000 points today. Okay? So do you see how the market was giving you a big warning? Now that was in the Dow. Let's look at the chart of the spiders. Here's a weekly chart of the spiders. Kind of looks the same, right? We're above the 50, but now at this point we start getting some warning signals, okay? We're below, we're back above, we're back below, all right? Here's the only trouble, once again. The date is 2008, January 2008. So everything you're seeing was prior to 2008, okay, on a weekly time frame. We had a touching of the buy-sell line. We had 1, 2, 3 closes below, 2 closes above, 1 below, 1 above, and then 3 below. So we have a number of red flags being displayed here. Just like the other chart, 1987, in 2007, the market, the spiders on a weekly time frame was giving us a huge red flag, telling us that the market may be changing its mind about being long. So at this point, you could have decided to go short. You could have decided to get out of all your positions, maybe raise your stops. It's entirely up to you. But based off this simple tool, you could have dodged the beginning of the 2008 financial crisis. All right, we all remember what happened then. We went to a big bear market, okay? This is over 11 years ago. Now, let's look at something that happened. This was at the end of last year, almost a year ago. We're above the 50-period moving average, and we have 1, 2, 3 closes below, okay? So that's enough to tell us that we may be heading into an overall downward trend. So take caution. Look what happened. The Dow fell 4,600 points in the next 3 months, okay? Here's a perfect example where you see 1 close above. That's not enough. You need 3 to 5 closes because look what happened immediately after that. So the market is always giving you warnings. It's always telling you what it wants to do. Your job as a trader is not to do what we've always been trained, to try and fight it, to try and predict what it's going to do. I mean, that's silly. No one can predict it. Our job as traders is simply to listen to the market and then jump on board. It's as simple as that. We don't need to figure out how high or how low something will go. We don't need to try and pick a top or a bottom. That's a gambling mentality. As a professional trader, you need to act more like a professional. Don't try to outguess the market. The market is your best friend. Why would you try to outguess your best friend? The market is always telling you what it wants to do, so simply go on board with what it wants to do. And then you'll see those consistency in your trading come to light. Now, if you don't believe this still, go back and research your last 10 to 20 trades, regardless of what system, regardless of what strategy you use. I don't care if it's one of mine or one of your own. I can almost guarantee you that your losses were due to the fact that you were out of sync with the buy-sell line. Now, it doesn't matter if you say, well, Steve, I only trade 5-minute charts. So do I. Apply the 50-period moving average. That's what I do. And if I'm trading a 5-minute or if I'm trading a tick chart, I only buy if I'm above the 50. I only sell if I'm below. Now, if you're investing, you say, well, Steve, I look at weekly charts. Well, I just showed you some weekly charts. The same exact thing applies. Okay? Go back and do your research to find out. Remember, as I stated, we are an educational company. We're not trying to tell you how to trade. That's not our philosophy. We don't believe in that. All right? That, in my opinion, is a recipe for disaster. You should never listen to anyone tell you how to trade. You should be educated so that you make your own decisions. So this is what we're trying to do. We're trying to educate you. Now, up until now, I've shared with you older charts just so that you can understand the concept. I want you to fully understand that. Now, what I'm going to do now is share with you some recent charts on our platform that were current up until yesterday, Friday, okay? But I want you to take another look at our disclaimer because I'm going to show you a lot of performance results using our buy-sell line, which is automatically generated on our platform. But please remember, that we can in no way guarantee that any of the results I'm about to share with you will be repeated. And please remember that all examples are strictly for educational purposes only, okay? So as you're looking at our disclaimer, let me toggle over onto our platform. And I'm going to show you some current charts that are up to date up until this last week. This is Apple, as we can see here. Now, Apple has been going in a very nice uptrend. I'm sure at this point, a lot of traders would say, wow, that's some bad news or something caused this to go down. I'm going to exit all my Apple shares and I'm going to think about getting short on the first bounce. Here's the first bounce. Well, I'll go short and then look what happened, right? Does that sound familiar? Does that sound the way you trade? Okay. What if we applied the buy-sell line? Could that have helped us with Apple? Well, let me share with you how simple it is. I designed the platform with Pro Trader Strategies to make trading extremely simple. Now, in our upper green strategy tab right up here, right to the far left, this is where we want you to start your trading. In the far left-hand corner, the first thing you do whenever you're trading is click on buy-sell line. Now, we have a number of ways to view it. What I want to do is just use the simplest, which is the 50-period moving average, okay? Now, going off what I just taught you, where has the majority of price been in Apple? It's been above. And even when we had this large sell-off, we only had 2 days close below. Then look what happened right after that. Had you have sold on this bounce, where would you be selling? You would be selling above the 50-period moving average. And that's why you would have lost money. Now, I'm sure a lot of students will say, well, Steve, I could have sold here and made quick money, or I could have sold here and made a little money. Sure. But what if you wanted to buy? Don't you think it would be a lot simpler and you'd sleep much better at night knowing that you're in sync with the overall trend? If I just apply one of our strategies, strategy number 9, don't you think you'd rather take these buy signals right here as opposed to trying to get in and out quickly on a short sell-off? Okay? That's how simple it works. That's how easy it is. All right? Let's look at another stock here. Let's look at TA. Okay? I'm going to apply TA here. Once again, most traders would say, well, Steve, I bought right here on this support. It went up for a couple of days or weeks, and then look what happened. 2 weeks later, I was giving everything back. That's because price is below the 50-period moving average. The same simple process works if the market is going up or down. Now, if you had tried to buy this stock, you would have lost a lot of money, or you'd have to be very quick. You probably would have had only one chance right here to buy it. You would have had to get out in about 3 or 4 days. Why not take advantage of all these sell signals, okay? Don't you think you would have done much better, okay, just using the 50-period moving average? Remember, you can apply any strategy you like. Now, let me share with you another way in which to view this, because we found that most of our students in the past said, God, Steve, this is great. I love it. And then they'll go to a webinar or they'll read some book and someone tells them some great new fly-by-night system that you don't have to follow this. It's only going to make you millions of dollars. And then, like most students, myself included when I first started, you forget about it because you want to go to the next thing that's going to promise you that you're going to retire in 6 months, right? Well, we decided to make things simple so that it's always there. We have 4 different ways to view the buy-sell line. Right now, you're looking at the simplest, which is just the 50-period moving average. But here's another way, our most popular, which is called our fluid. When you click that on, it automatically changes the color of the screen. Therefore, you don't have to always have the 50-period applied. You can keep this on your screen at all times if you'd like. And you know, if price is in the red-orange zone, you're only a seller. So there's nothing you even have to think about. And if price is consecutively in the blue zone, well, then you're a buyer. That's how simple it is, right? Okay, now let's go forward and look at some more examples here. Let's look at Urban, okay? And I'll take your requests too. If you're interested in looking at some, I can look at them for you. Okay, Urban was below coming into August. We had 2 closes above, not enough to tell us, and then look what happened, right back down below, right? We had 1 close above, right back down below. But at this point, we had 1, 2, 3 closes above. This is enough to tell us, or at least give us a warning, that the trend may be changing. Now we went and closed 1 below, but then right back up again. So this is a very strong sign that the trend is most likely changing. And look what happened. This is when the stock was roughly about 23, and now it's up to 28. Okay, let's look at another example here in Netflix. Someone's asking about Netflix. Okay, punch up Netflix here in our platform. And this is simple. I mean, it doesn't get any simpler than this, okay? If you have been buying Netflix, well, basically, you're, once again, trading the way most traders trade, all right? This is what traders do. They're always trying to pick tops and bottoms. And so they're saying to themselves, okay, well, this has gone down low enough. Look at this major support. That $10,000 class I took that follows the institutions and follows volume tells me that all the institutions are buying here, okay? And so I should be a buyer too. Well, it went up for about 3 days, and then look what happened, lower lows. At this point, you probably would have been stopped out and probably would have said, boy, I wasted $10,000 on this class. Why not just apply the 50-period moving average? If you're a member of our platform, you can have this up all the time. Now, we had one close above. Now, this is not enough to tell us that we're going higher, okay? And then look what happened. We closed right back down below. So you're going to need at least 3 to 5 closes, either above or below, okay? Someone's asking me to punch up Costco. Okay, so I'll punch up Costco, C-O-S-T. Okay, all right, this is very simple. Look at, we've had these major sell-offs. They've come right down to the buy-sell line, which is a phenomenon you see a lot, and then it goes higher. We come right to the bottom of the buy-sell line, and then we go higher. All right, this lends itself to a lot of strategies, such as strategy number 4, where you can generate buy signals. Now, here's an example here in strategy 4, and this is a good little tip I can also share with you. At this point, a sell signal was generated. Someone could say, well, Steve, how come that didn't work out? Well, remember, not every signal is going to work out, but here's one way to filter them out. If you get a buy signal, you want to make sure that the slope of the fluid buy-sell line is very strong and steeped upwards. And conversely, if you get a sell signal, you want to see that the slope is very strong, steeping downwards. Now look at this sell signal. What is the slope of the buy-sell line? The slope is up. So therefore, you would not have taken this trade because most likely it's going against the overall trend. Okay? So even though the rules of the strategy were met, the buy-sell line, which is determining the overall trend, is saying yes, but even though the requirements could be met of the pattern, the trend is still too strong to the upside. Okay, so you see how this tool, again, I've taught you another way to help you with the buy-sell line. So whatever strategy you're using, you want to see this nice upward slope if you're buying. And conversely, if you're selling, you want to see a nice, strong downward one. For example, when we looked at, let's look at that TA again. I believe that was a very strong downward slope. Yeah, see? A nice, strong downward slope. And if you apply the strategy, as you can see, these worked out very nicely, even though you would have had to wait a little bit for this one to work. Maybe you would have got stopped out in the first 1 or 2, but ultimately it would have kicked in and you would have made back everything you lost. Why? Because the slope is very strong to the downside. Okay, what is the next one? You're asking on ZTS, okay. That's Zebra Tom, yeah, Zebra Tom Sam, okay. We'll punch it up. Yeah, another example. What's the direction of the slope? Very strong to the upward side, right? And price is above. So every time you have a sell-off, that is not looked upon as something to be frightened of. It's a buying opportunity. If we added one of our strategies again, strategy 4, don't you think you would have taken advantage of all these buy signals? This is what I mean, how you can have consistency if you're in sync with the overall trend. Let's look at XLNX. Ask ourselves, where is price in relation to the buy-sell line? Well, originally price was right here, above. So we were only looking at this from a buyer's point of view, all right? Now, if we added one of our strategies, well, guess what? We never had a buy signal. So that's good. We didn't have to buy here while it was going down. But then once we were going lower and we started to get a very strong downward slope, these are the signals you want to take right here and then another one right here. So this is what I mean by consistency. It's very easy to be in sync with the market if you know how to apply the right tools. There's no reason to overcomplicate things with looking at the institutions, with looking at volume, with finding out the earnings. You don't even have to look at a higher time frame to determine the lower time frame. I know a lot of students will say, well, Steve, what about the weekly? It doesn't matter. I stopped looking at higher time frames. You know, I was taught the same thing 4 decades ago. I have found no consistency in that. I don't look at a weekly to find out what to do on the daily. Or I don't look at a daily to find out what to do on the hourly. I mean, it doesn't make sense to me. I only take the signal on the time frame I'm looking at. So if I'm trading a 5-minute chart, that's the only chart I'm looking at, the buy-sell line. I don't care. Now, once again, we're not here to tell you how or how not to trade. If you feel you must use that, 2 different time frames, it's up to you. But keep things simple. Don't overcomplicate your trading. I know a lot of students say, well, Steve, what about news? What about economic reports? What about the presidency when he announces something and you think, listen, if we go back and look at a chart of the SPY, any chart, don't you think going back here that there were announcements, there were economic things happening, that there were fundamental conditions taking place? The market takes that into consideration. I just shared with you what charts going back 30 years ago in the spiders and in the Dow. Don't you think there were economic things happening then? All the economic news happening in 2008 with the financial crisis. Well, how did the market know to get you out prior to that? Remember, the market tells you everything. There's no reason, if you really feel to listen to fundamental news, you don't have to. I stopped looking at fundamental news 42 years ago. So if I'm still here trading, ask yourself, do you really need to look at that? Does that really affect your trading? Now, once again, if you feel you must look and you're scared about a presidential announcement or some economic report or some jobless claims, if you feel those are important, then feel free to use those. But if you're asking me for advice on those, my suggestion is, well, I don't look at those. I stopped looking at those, in the 80s, in the 70s. So, the result would be they really, work if I were no longer trading. That would mean that, well, that's the answer. Those things must really work because Steve doesn't use those. But I don't use them. I don't even look at them. So if I'm still here, then ask yourself, do they really work? Do you really need that? Remember, we want you to make trading simple. It's the easiest thing in the world to overcomplicate your trading. It's very difficult to simplify. Let's look, someone's asking for RGLD. Okay, RGLD. I'll type that up. Well, as you can see, we have been above the 50-period moving average, and here's where the market's giving you some clues here. We have a couple of closes below, one above, one below, back above, and now we have 1, 2, 3 closes below. So what is the overall trend of this? The overall trend is down because we have a total of 6 closes below. This does not mean you sell RGLD at the market, and even if you're a long-term investor in this stock, this does not mean that you exit it right now or sell a portion of it. This is just a cautionary tale, and this is just basically something telling you, listen, you may want to tighten your stop, or you may, if you're an aggressive trader, look for shorting opportunities, or just be very careful. If you're thinking about buying this, you may want to wait till you get 3 to 5 closes in the blue zone, okay? Now, if you want to look at a weekly time frame, I know a lot of students say, well, Steve, what about a weekly? Okay. This is where students get confused because they say, well, Steve, this doesn't make sense. This is in the blue. Let's tighten this up here. Well, sure, it's in the blue. So this means the overall trend is up. But this is why I don't put these two in sync, because the overall trend could be up and you could continue to go lower and lower for the next 2 or 3 weeks. So if I'm looking at a daily chart, this is going to go down tremendously. So even though the weekly chart tells me it's okay, the daily chart says no. So only trade the time frame you're trading. If your signal is based off a daily chart, then that's the only chart you should be looking at. If your signal is based off a weekly chart, well, then you're more of a swing trader investor. That's what you should be thinking about. There are completely different rules for the time frame you're looking at. Why put them together? They don't mix, okay? So on a weekly time frame, this is doing very nicely. As you see here, we had 1 close below, 2 closes below, and then right back up again. This is why we say 3 to 5 closes below. One more weekly chart. Let's look at OI, okay? OI. All right, we were above the 50-period moving average coming into May, and then we had 1, 2, 3 closes below here, roughly around $17. Stock is now down to 9, okay? Now, I'm sure you could justify this and say, well, yeah, Steve, the earnings came out and they were terrible, or yeah, Steve, well, that industry is really bad. I mean, that sector. Listen, the market told you well before that news came out, well before it fell out of bed here. Remember, the market tells you just about everything you need to know. Why overcomplicate it by thinking that fundamental news or economic research or things like that are going to help you? There's really no need to look at those things, okay? Okay, let's go back now. Remember, we shared with you those for educational purposes only. There's no way we can guarantee that any of those results can and will be repeated in the future. So as we come to the end of the presentation, remember what my mentors taught me. The market, not some guy in a chat room, not some presidential report, not some convoluted indicator, but the source of what you're trading, the chart in front of you, is always telling you what it wants to do. Why overcomplicate it by trying to pick a top or bottom or guess how high or how low it will go or when it will stop? Your only job as a trader is to listen to what it wants to do and then jump on board. That's your only job. It's very simple. All right, so let's recap. Always apply the buy-sell line, okay? This is probably the most important tool we have at Specialist Trading and Pro Trader Strategies. And don't worry, you don't have to purchase anything. You probably have access to it right now because it's simply the 50-period simple moving average. In order to use it properly, though, you must ask yourself this question. I don't care what strategy, what technique, what method you use. I don't care if it's based off fundamental news, based off economic reports. I don't care if it's based off the tides of the ocean. Ask yourself, before you pull the trigger, buy or sell something, ask the question, where is price in relation to the buy-sell line? You will have a higher level of consistency if you only take buy signals if price is above the 50, and if price is below, if you only take sell signals. Okay, so we have a great discount for all of you taking time out of your Saturday morning to come and hear our educational presentation. We are going to offer you our PTS Primo chart. That's our platform that is designed to teach you how to be on the right side of the market. This comes with all the access which I just shared with you today. We're going to offer you 30-day trial for only $7. Think of that. What's taken me 42 years to accumulate, you're going to get for 30 days for only $7. You're going to have full access right there. Let me share with you what you're going to be able to access with our trial. You're going to hit the enhanced buy-sell line. This is not just the 50-period moving average, but all the different ways to view it. That's the fluid buy-sell line, which I just displayed for you on our chart, along with all the other ways, the background feature, the basic 50-period moving average, and another feature as well. You're going to get our pattern recognition tool, the top bottom 25%. This is a pattern recognition which helps you define the short term. So if the short term top bottom 25% is in sync with the buy sell line, you have even greater odds for consistency. You'll also get our strength of trend feature. This is a tool I developed with Pro Trader Strategies that has a really great performance of finding out the strength of a trend. So you see these markets that go straight up and you're thinking, wow, how much strength is left in this? Is it going to dissipate or does it have more room to go to the upside? This is a great tool for telling you that, okay? You have that feature to experiment with as well. You're also going to get our signal scanner. You can scan for stocks that are in the above the 50 period or below the 50 period. You can scan for the top bottom 25% pattern recognition feature. There's a great way to help you so you can look through the entire list of stocks in the S&P 500, the NASDAQ, different markets, European markets, currency pairs, futures, all of the major markets you can scan for these features. You're also going to get over 90 of the most prominent technical indicators you can experiment with on your own. Our automatic exit levels. This is an automatically generated exits, a great feature we have. So if you decide to get long a certain area, you can click on and see where the automatic exit levels are for a great risk-reward ratio. And then lastly, personalized tech support. If for any reason you're having difficulty, you can always contact our tech support and they will be there within a matter of moments to resolve the issue for you. So think of it, all of these plus more for only $7. This is the educational portal that teaches you how to be on the right side of the market. So think of it. If you've been having trouble trading, if you're really having that hard time being in sync with the market, this can help you get back on board. All right, here's our offer, 30 days for only $7. And after 30 days, you can decide for yourself if you want to continue, or you can decide for yourself if it's not your cup of tea, thank you, and it only cost you $7. Here's how to take advantage of this great offer. Contact Pro Trader Strategies. They're in charge of all of our discounts, of our pricing, of all of, they helped me design the platform. I would suggest if you have any more questions concerning the platform to either email them or call them directly at area code 310-598-6677. Now that link on the very bottom will take you to the information and the sign-up page for the $7 offer. It's not a live link though, but you see in the chat box we have posted a live link, so you can simply click that on and it will automatically take you there, okay? Okay, I promised the last portion for any questions. If you have any, now's the time to write them in. I will answer them to the best of my ability. Someone asks, how about Trump's Twitters that are affecting the market these days? Well, once again, we covered that, but remember, many times, let's say he tweets something and the market goes up or the market goes down, go back and do the research. I can almost guarantee you that if it was something that the market viewed as positive and it went up based off a tweet, most likely it was already in the blue buy zone. And most likely if it was a negative tweet, okay, most likely if the market or whatever you were looking at was in the red sell zone. If you don't believe me, go back and check, as I stated. You can start doing the due diligence and research right now. This is a great, great way to check if these things work. And like I said, once I realized this, I stopped looking at news altogether because it doesn't matter. Most of the time, the market tells you in advance of some news event, even a tweet. Okay, that's been my experience. Someone says, does this work on currency pairs? Yes, it does. We have a number of students that use this on currency pairs. It makes absolutely no difference. Someone's asking, what's the price after 30 days? I believe the price, you have to check with Pro Trader Strategies, still stays very inexpensive. It's only $97 a month. But, I would check with them first before you quote me on that. Now, still, $97 a month is very inexpensive. I have traded platforms that have cost me anywhere from $300 to $500 a month, and they don't have half of the things that we have on the platform. So it's a lot of great free information. Someone's saying, do those strategies come with the platform? No, I'm sorry. Those strategies are extra, but they are as low as $400, and I'm sure Pro Trader Strategies can help you with some great discounts. Now, once again, don't quote me on those prices. They have been discounted in the past around $400. They may be higher right now, but they would be happy to work with you, okay? Okay, if there are no further questions, we've come to the end of the presentation. I just want to say thank you so much for attending today. Remember, as I stated, we are first and foremost an educational company. We always want to leave you with some education. So go back and do the due diligence. Go back and do the research. With the 50-period moving average, I can almost guarantee you that you're going to see how powerful this simple but easy tool is, okay? As we conclude here, I just want to say thank you so much for attending. Remember, be sure to contact Pro Trader Strategies with any questions. There's absolutely no obligation. And as you take one last look at our disclaimer, I just want to say thank you so much for taking time out of your Saturday morning to join us. I wish you the best of luck of trading, and I look forward to all of you becoming students of mine at the PTS Primo Charting platform. Thank you so much. I'll see you next time. Bye-bye.